This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. This is Tracy again to bring you your value stocks here in 2025. And I thought this week I should focus on the stock that is a representation of all things value, Berkshire Hathaway. We haven't talked about it in a while, and I've been wondering myself, so I felt many of you might be wondering too, should you be buying Berkshire Hathaway here? It is obviously still managed by the CEO, Warren Buffett, and he is the greatest value investor to ever invest. And he's still CEO. So it would make sense that us value investors would be interested in owning these shares. I have owned them in my own personal portfolio, but it's been maybe 20 years since I have done so. But I've missed a nice run over the last 5 years since the pandemic, really. So over the last 5 years, the B shares, because that's all we're going to talk about. If you can afford the A shares, good for you. But we're going to talk about Berkshire.B. And on many websites, it's BRK.B. I think on Yahoo Finance, they might do a /B, but one of the two, if you just put in BRK and you start typing that in, you should be able to find the B shares. Those are the cheaper ones, obviously. But in those 5 years since the pandemic started, the B shares are up 101.9%, so almost 102%. That is outperforming the S&P 500 over that same period of time. Over the last year, which would be January of 2024 through when I'm recording this on January 22nd, 2025, they're up 25.8%. Year to date, up 2.1%, but year to date has been a little rocky on the stock market, although it looks like we're getting a bit of a rally happening once again. So, these have been pretty good performance. But because of the good performance, even though earnings have also been trending higher, it means you're going to pay more for the stock, not necessarily in the price of the stock, but in the fundamentals, in the PE, in the other valuation metrics we might use, price to book, price to sales, PEG ratios, all of those good things that we like to use as value investors. So right now, Berkshire.B shares PE, this is the forward PE, is at 23.5. Price to book still looks attractive at 1.6. Price to sales, little pricey here, even on the price to sales at 2.7. PEG ratio, 3.3. So none of those, except for the price to book, are screaming value at all. And that's part of the problem I've had with Berkshire Hathaway and thinking about buying it in, the last 6 months to a year, is that it is still very pricey. Now, Berkshire does not pay a dividend, but they have been using some of their cash to buy back shares. So in the fourth quarter of 2024 and the fourth quarter of 2023 and the first quarter of 2024, they bought back $2 billion worth of shares in each quarter. So that was $4 billion they spent. They notched it down a bit by the second quarter of 2024, and they bought only $345 million, which for a company the size of Berkshire Hathaway, that's really almost nothing. It's almost kind of like, they bought $345 million worth of Berkshire. But in the third quarter of 2024, and we don't yet have the fourth quarter, but in the third quarter, they bought nothing. No shares whatsoever. And that sent a big sign up to me because Buffett has always said he will buy back Berkshire Hathaway shares if he deems them to be a value. And that's like on a conservative basis and, looking at various fundamentals. He feels like it would be a waste of the shareholders' money, because that's whose money it is, to buy back the shares if they were simply too expensive. So it's a little bit shocking to see that he did not buy anything in the third quarter. The shares were hitting new all-time highs around that time, and maybe even into the fourth quarter. They have pulled back a little bit off of that. But still, as I mentioned, PE of 23.5, price to sales of 2.7. Some of these valuations are, a younger Warren Buffett himself wouldn't even be considering Berkshire Hathaway. So why am I? Why am I even discussing it on the podcast as, whether or not you should buy it here in 2025? Well, because of the cash position. Yes, I am intrigued by the fact that Berkshire now holds $325 billion. That was at the end of the third quarter, so we don't yet know for sure what is happening for the fourth quarter. It might be higher, and it actually probably is, because a lot of that cash is invested in the treasuries, and he's getting 4 to 5% off of that investment. And, and you can kind of do the math there of what even just 300 billion at 5%, it's generating 15 billion just in cash for that quarter. And he hasn't bought anything. So that's just going to go back into the cash hoard. So we know it's going up, but how much more in addition to that from stock sales and that we don't yet know. That 325 was up from 276.9 billion at the end of the second quarter. So it is jumping quite a bit. He sold 36.1 billion of stock in the third quarter. So you can see that the cash was also generating a decent amount of cash. Plus the regular business is generating cash flow. Don't forget about that, because they get paid dividends out from Bank of America, from Chevron, from Occidental, from Apple. And yes, they've lightened their position in Apple and Bank of America, but they still have it as far as we know. And so those are still paying dividends. So they have all this cash coming in various forms. And then the business itself, Berkshire Hathaway's various businesses like the railroad and, See's Candy and all of that, that is also generating some cash as well. So a lot going on that is intriguing. Now, everybody has been debating for a while, he's about to make some kind of big acquisition. He's about to buy some more stock. He's about to do something with all that cash. But for now, he hasn't, and it is going to grow. So I'm intrigued by it. I'm intrigued by the thought that if I'm a shareholder, that's obviously my cash, and that right now it's generating 4 to 5%, which is fantastic, but I may get it back in some kind of special dividend. Now, we know Buffett himself does not like to do dividends, but it might be someone else is in charge by the time they decide to distribute this cash. And so then maybe I'm going to get some real nice payouts here if this cash is distributed to me. So these things are kind of running through my mind. I kind of like the idea of maybe getting some kind of nice big payout. Or if I'm a shareholder, I do like the idea of getting he's getting in the treasuries for this cash right now, especially with stocks at all-time highs once again and valuations kind of pressed. I'm glad he's not deploying it into either, equities or into buying a company that may be overvalued and he's going to pay too much for. So right now, I'm perfectly fine getting 4 to 5% on that cash for now. But the cash is intriguing. It is unusual. It is the highest in the S&P 500, obviously. Berkshire Hathaway itself is now a $1 trillion company. So it has joined the $1 trillion club, but it just doesn't get the same kind of airtime as some of these others do because, Buffett isn't out there in the media right now. We have the annual meeting coming up again in May. But he said last year he may or may not be attending the next one. He didn't know. He said his health was fine, but given his age, you don't know. So unclear, but I hope he's there because I enjoy watching the annual meeting to find out his take on a lot of different things, not just Berkshire Hathaway. So we may be waiting until then to find out something. So I'm asking the question, should you buy Berkshire Hathaway stock in 2025? It's not cheap. It does have decent earnings growth. I'm going to take a look at that because I only looked at the price consensus. Now, we don't have a lot of analysts on Berkshire Hathaway because it's a conglomerate. The analysts don't like covering it because there aren't many conglomerates. So how do you cover this type of company which owns, stocks? It's got this cash position. It's got over 50 other companies within the company. It's just very difficult to get a handle on the earnings and what's happening. And so not a lot of analysts on it. But we have 3 estimates for 2024 and earnings expected to be up 15.1%. To 1978, but 2025 right now, we're only showing 1994, so up about 1%, not even for 2025. But remember, Berkshire Hathaway is big on insurance, and they do have some reinsurance, and they have been having impacts from the hurricanes. So we'll see what will happen with the Los Angeles fires as well. But that could be some of the, hesitancy on the 2025 earnings. But we will know when they report again. So they report at the end of February. So we still have to wait a number of weeks here. So again, going back to the question, should you buy Berkshire Hathaway stock in 2025? For right now in 2025, it is a Zacks number 4 sell right now on Zacks, but that's because there's one estimate that's down in the last 30 days, and it's only down by 3 cents on the consensus. So that's not super dramatic. I'm not too worried about that, but that one estimate is giving us this rank of 4. So I don't think it's cheap enough, even with all that cash sitting there. I wish it were. I keep looking at it, and the shares are off the highs that it hit going into December. It had a nice sell-off, but it still wasn't enough for me. And then it's rallied again now here in January of 2025. So it's never got to a place where I was like, okay, this is a deal again. And now it's rallied a bit again, and now it's back to being, out of my price range once again. So I'm on the sidelines. I'm watching it. I kind of hope they don't deploy or do anything with that cash while I'm on the sidelines, because I do think the stock will get a bid when something happens with that cash. But until that happens, it's, kind of in this range between $440 and $500, and it's expensive in this range for what it's generating. On the sales side, we have sales growth of almost 0 here in 2024, and then 2025 expecting just 2.9%. And that's a big contrast to even a slower growing tech company like Apple, which is growing mid-single digits in this fiscal year for sales. And a little bit over 9% is expected for the next fiscal year. But Berkshire, just pretty slow growth if you're just sitting there on that cash, right? You're not, you're getting the investment in the treasuries, you're getting 4 to 5%, but that's not enough for a company of this size to really do much. So that's Berkshire Hathaway. You can always look at some of its individual components. He's been selling Apple, AAPL is that ticker, and Bank of America, BAC is that ticker. He's bought off and on Occidental, but not recently, and it's been kind of small buys into Occidental, ticker OXY. And I don't believe he's bought any Chevron recently, ticker CV as in Victor X, CVX. Those are some of his largest positions now. But we won't know until they file their next filing, which is still not until the middle of February, when we'll find out what else he's been buying and selling, unless it's Occidental. Then we find out within 24 or 48 hours, something like that, on Occidental, because he's such a big shareholder of that company. So he has to report that separately. But these others, he's now at a smaller position in some of these, and so he doesn't have to tell us on some of them. Although I'm not totally sure if he's gone under the threshold on a Bank of America yet, but he might have gone under there too. So keep that in mind. You can buy the individual holdings in Berkshire if you kind of want to mimic what he's doing. We've always talked about that, but this podcast really was about owning Berkshire Hathaway. And I wish I could. I really do wish I could, but it's just not cheap enough for me here, even with that cash. But I'm eyeing it. I'm keeping it on my watch list, so maybe you should too. Again, the tickers, Berkshire Hathaway, BRK.B. Apple is in his portfolio, ticker AAPL. Bank of America, BAC. Chevron again, CVX. Occidental, OXY. And I do not own any of those stocks in either my own personal portfolio or in Zach's portfolios here, Insider Trader or the Value Investor podcast, because that's this Value Investor newsletter. So, but I'm keeping it on my watch list. All these really I would keep on my watch list, even Apple, because has pulled back and it is cheaper here, but Apple, again, still too pricey for me. It could be the reason that finally Buffett decided to cash in on his big winner there, because it is pretty pricey on both price to sales and PE basis. I think it's back to around 30 times on the PE. Price to sales was a little bit over 8. And both of those are too expensive for my blood too as a value investor. So, but you can own it if you buy Berkshire Hathaway. Obviously, you can own some shares. As far as we know, he's still in some shares of Apple in there. So as always, I aim to bring you value stocks every week. This one is not one for right now, but it's always one we keep an eye on, and we will be talking about it again in February when they tell us what they've been buying and selling. But there are a lot of other value stocks out there right now, including the energy stocks. I am kind of surprised he's not adding a lot more to some of the energies, but maybe he is, and we just don't know about it yet. But those are ones I'm going to be watching because energy is still cheap, especially on the natural gas side. And Chevron, pretty big natural gas producer as well as oil. So something to watch as we move forward. But you want to subscribe so you don't miss a single episode. Get us on Apple Podcasts. Get us on Spotify. We're on Amazon Music. We're on SoundCloud with the Zach's Market Edge. You just have to put in Zach's Market Edge to get us on SoundCloud. And we are on YouTube. Go to Zach's Podcasts. Put in that, subscribe over there. You can get all of the podcasts there, including ETF Spotlight with Nina. And sometimes she does talk about value ETFs over there, so, and a host of other things, but you want to be sure to get her podcast as well. But get us somewhere, and I'll be back again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.